What's good, YouTube? It's your boy Zay, and welcome back to my YouTube channel, First Generation Wealth Building. Check it out. This is another urgent special update on the SPX special indicators. Now, the last update we did was on Thursday. So now here we are at Tuesday, and I feel it's really important to keep y'all updated on how these things are progressing. So with that being said, we're going to get right into our charts. Now, before we get into the charts, don't forget to press that like button as well as subscribe to the channel. And we're going to get it right into it. We're going to start with the dollar. Now, starting with the dollar, okay? Last update, let's go break it down to a daily, because last update was Thursday. We were going into NFP, and I gave out a few scenarios, like some kind of things to watch out for. So let's just kind of review them and walk through what we've seen. So that evening, we were approaching these lows, right? We was talking about these 104 lows, how we basically closed under them. You go to, the line, we basically undercut these, right? And that eventually we would get into here and we start to look for some structure, maybe even a bounce, right? That's what we was talking about. So we came into NFP Friday, and as you can see, we went up, or like we made a move up, right? In NFP, and then we sold off the rest of the day. And then coming into Monday, overnight, we made a new low, but then coming into Monday, we got some ISM numbers that weren't too good. And I think we even had a little something else happen. I can't remember what it was. And so basically the dollar reversed, or starting to reverse. And so I talked about that in the Thursday video. Was like, hey, look, we're starting to push some extremes. We should start looking for a bounce, or for it to start to, form a base. And that's essentially what we see happening, right? If we look at the dollar on a weekly, when I first did this first update, or when we first started talking about the dollar, we were up here. I want everybody, just to make sure to know where we're at. So I talked about how from here, the dollar looked weak. I would love to see it come down to the 104. We did that. We came right into this area, and now we're starting to react just like I thought we would. And now we're starting to get that retrace to hit this area, which was prior support, which is now going to be resistance, which is why I don't know if we have quite turned yet. This could be the start of that basing out that I was talking about. Because ultimately, as we look at the dollar from a weekly, two things need to happen for this turn to really be legit. For the dollar to start its turn, I want to see, or it would need to break this weekly high, which is 107.19, so basically 107.20. And I would want to see a new weekly close above this, which is, or this open. So that'd be 106.06. So some requirements I want to see is by the end of this week, if the dollar is truly going to turn around, I want to see it at least close above 106.06 and truly make a new weekly high. If it could do those two things by Friday, then I'll be a believer that the dollar just turned around, and I'll be sure to keep y'all updated. If it doesn't do that, then I think the other possibility is we could get into this daily gap that we have, right? So it's, as you can see, it's retracing a little bit right now, but we have this volume gap right here that we made from, what was that? It's actually a monthly. So you can see this was Wednesday, the November 30th, and this was Thursday. So we got down into the month. So we could be trying to kind of hit this gap and retrace a little bit before, again, like I said, reversing to the downside, right? And continuing to build a base in this area under this 200, because as you can see, the 50-day is heading down aggressively, meaning that the dollar has broken structure and that truly it's in a downtrend. Now, it could be trying to stop this downtrend, but ultimately I think it's just, kind of forming a base here because from a monthly perspective, it looks like we want to hit this monthly order block, right? So if I change this to candles, you guys can see this is a monthly order block right here. And this open is 103.21 and the close is 101.78. And As I talked about early, the dollar has been making higher lows. And so ultimately, I am bearish on the dollar into the end of the year, thinking that we at least come down to 103.25, if not 101.63. Now, if we're going to have a bearish month, you want it to start bullish, meaning we do want to see it going to the upside so that it draws in liquidity to then be able to flush down. So far it's playing out as we want it, right? So I want to, if you're a bull or you want to be bullish into the end of the year, you don't, you wanted to see it come in here, get rejected, and then eventually undercut these lows at this 104.11. And if we undercut those, that again kind of tells me that we most likely want to come interact with where this monthly order block open is. And as you can see from a daily, you've got, just a bunch of gaps, and you got some wicks down here, gaps down here, more wicks and stuff. Just a lot of price action going on up in here that if we start to undercut this 104, I definitely think this will be the next zone we would come into to start to interact and start to look for like reversals and building a base, right? If not, it's just going to keep slicing and breaking down, and eventually we're going to come to what I call stubborn support. And then ultimately, this is where if we just keep slicing through all this like butter, then eventually I think we would get down here, and this is that spot where truly we will form a base and start to truly turn around, right? Which makes sense, right? Because at that point, we're talking about a dollar now, selling down another from here, it'd be down another, 4%, after having a 5%, and that's a lot for the dollar. So a 5% drawdown and a 4% drawdown, that means the market would, have been doing pretty decent. So that's where we're at with the dollar, right? That's the update on the dollar. Is to, right now at 9 o'clock at the time of this recording, we are drawing down. But again, this could just be a drawdown for us to then try to push and get into this little volume gap here, and maybe even push a little bit further. But then that, that could mark a little bit of the top here. I mean, I don't know. We'll see. We just have to see. At the end of the day, we got down to the original target, which was to undercut these lows, get into this area. We kind of talked about how we would get possibly down to this 104.11 and get some interaction. The last time we got here, this thing was able to bounce all the way up to 107.98. Now, of course, we got down here technically, right? Because we hit this. That's the wick. Now, this is the test to see, do we have enough to push us to redo this whole move here? So that's why I'm looking, that's why I said certain levels are critical, right? Because we got to close above this. We need to break that. And ultimately, we would get up to this 107.99, which, again, puts us at this move, and we still have more room to turn. So, this could really be, looking at a move up into, say, about the middle of the month, right? Going into Ppi CPI. And then those could be the catalyst that if this is going up into those events, I would want to see, do they cause them to sell off? And that's kind of like how I'm looking at the dollar, both ways, right? To see, which ways are going to go. Next is TLT. Now we talked about TLT actually being more than just an indicator to gauge the market's health. The bonds would have to be looked at more as a flight to safety, is what I think I talked about last video, is how that there could be a divergence where the market doesn't keep performing, but yet the bonds keep going up. And as you can see this week, the market is down, and yet the bonds are still up. So there's a slight divergence there. And now the bonds are seen as something as safety, and equities are kind of selling off. So bonds are still showing strength to me right now, at least the TLT, right? If we break it down, like from a monthly, I think I talked about it, how it looks like it's on a first class trip to come fill this volume gap right here. So still pretty bullish on the TLT and bonds. And if you look at the 1 day, or the daily, we had a gap down and then we had a nice little gap up. Now we are hitting resistance at this 107, and 108 was resistance last time. So we could be, bumping our head up against resistance. We do have a slight negative divergence right here. So could the TLT start to roll over? We'll have to see, right? We definitely are at a critical resistance, where this would likely start to roll over, but let's see if we start to get that rollover. And the reason why I say that is, before we get into the yields, high yield corporate bonds have gotten a pullback. These are more of a better guide to risk sentiment than TLT is. So even though TLT is still running, high yield corporate bonds are showing me a little bit of risk off because they pulled back. We got into the gap that we talked about and had identified, and we actually had some pretty decent days within that gap. I thought we'd be able to push a little bit higher, right? Because this was our weekly gap. But it's starting to turn around. And this is usually a sign of risk appetite. So we could just be kind of, pulling back out of this box in order for us to power up, for us to go ahead and get to that weekly gap, right? So we broke out, you pull back, and then, we go create a new high above here, as long as we don't break this low. So as long as the HYG doesn't break 74.22, is what I'll be watching for. As long as we don't break 74.22, then there's still a shot for this to turn around and keep going up. And then that could kind of signal risk back on into the end of the year. But the way this is looking, it looks like we're going a little bit risk off ahead of PPI, CPI, and Powell and all of that, which is next week. So that's really the update on HYG, right? So we break it down from a weekly. I was saying how this was kind of bullish, but now we got a little bit of a pullback. So let's see, do we break, past these lows and undercut that? That would be super negative. But if we just are just kind of retracing in the here and then eventually going to rebound, then, this could just be a slight little shakeout into a nice big pump rally into the end of the year. So that's your HYG. Now let's get into TBT. This is why I said, about bonds being strong, because yields, they don't present to me as looking, recovering or strong yet. So looking at TBT, they had a nice strong down move here. We got this gap up, and it really, honestly, it came back to fill this gap. So I'll be interested to see, do yields start to make a move back up, after kind of what could be a double bottom here, right? Because ultimately, when you look at TBT, I think I showed there was like a weekly gap. Yeah, there's a weekly gap right here. Now we are sitting right on this weekly gap along of some down candles here. I think this one will more than likely be the order block if memory serves me correct. But anyway, at the end of the day, I know that this is a huge form of consolidation, right? So when you see consolidation, it's very probable that you're going to have some type of significant market structure within this area. And as you can also see, there's significant market structure up in here. So it looks to me that maybe we hold here for some more of a retrace before slicing through and then getting into this area where ultimately I think it starts to form structure for the rebound and turn. So that means to me that the yields still look weak, man. I mean, no matter how I slice, if I look at this monthly, this is this is a monthly volume gap, truly. So I could go all the way down to this 20, basically like 20, what is that, 27, right? And now I know for sure that this is a monthly order block right here, because after that we took off. So with that being said, this is a zone. And I got the close, so that's the 24.75. So really that 27.28, right? You got a gap, you got a monthly order block. There's a lot going on in this zone that makes me believe TBT wants to come down here and start to form some structure, maybe even come a little bit, lower before turning around. right? And so that means yields are coming down, which means the economy could be sick. So looking at the 2-year, right, like this is definitely a reversal type of candle right here, where we went all the way up to a high and we got a stream reversal. So I think I talked about this right now from a monthly, it's just retracing. If we can't close above the high or the open, which would be about basically 4.5%, and get to this high, which would be about 4.88 on the 2-year, this thing is set to turn around and likely come for this low, which would be right under 4. And this will be telling the market that the Fed is going to have to cut aggressively. And if this is saying that the Fed is going to have to cut aggressively, that means the economy is starting to get really, really sick and we're about to head into a recession. And so that's another indicator, or this is an indicator that you got to be aware of this yield. So let's break it down to a daily. Actually, I'm gonna go to a weekly first. Looking at the weekly, remember how I talked about like this one's going to give us some a fight. I was like, this one's gonna be pretty tough. I don't know if we're going to be able to get very far because of just all of the support is built up, right? And I knew the 2-year was going to be kind of stubborn. So I think I had mentioned I wanted to see it get to like 4.25. We did that, and now it's kind of getting a little bit of a retrace. But again, it still looks weak. Like we're just retracing. I think we could definitely continue to break down if PPI and CPI give us the data that we need. Then I don't see why we wouldn't undercut this 4% right here, and then eventually start to make our way down to this weekly order block right here. And I'm gonna highlight that. Dang, that represents 3.5, 3.8. That means they're gonna have to cut aggressively, man. Oh man, that's gonna be crazy if they gotta cut like that. So looking at it from a monthly, yeah, I can see why. So if we undercut this low, then yeah, we're definitely coming back to that area. You look at it from a monthly perspective, right? That could be the peak, and then we're gonna make a higher low, meaning yields have peaked. If yields have peaked, that's good for the bond market, at least TLT per se. If we look at the 10-year, 10-year definitely made a heavy peak up here at 4, started to pull back. If we look at it from a monthly, definitely as far as a retrace goes, it's looking real limited here. We go to a weekly, right? Like we had this nice sell candle right here, which you would think would be like an order block, but it's not, because you would have a much more violent reaction as far as the bounce goes if this was. So this kind of has me thinking like we're going to keep breaking down now. Also, with the 10-year, we talked about coming down into this area too, where I was like, once we cut this low, right, at this 3.5, we got a high here. It's possible we could get stuck or be trapped right in this zone, and I'll be damned if we ain't trapped right in that zone, right? Because if we break this down, then it looks like we will slide right here. So this is going to be our next level to look for. Wow. Could the 2-year slide possibly down to 3.2%? That's going to be a really sick economy. That's not going to, that's going to be a good thing, but that's going to be a bad thing too. So we'll see if that helps tech rally, but that's not healthy for the economy. And that's our yields. So again, that kind of lends to the bonds being strong and the yields still being weak. Let's look at our VIX. So talking about the VIX now, I was saying how the VIX still looked weak, right? Now from a monthly, we did it. We got a sub 19 VIX. I mentioned that one too. I was like, we might get a sub 19 VIX. We went to 1895. Remember that? So if you look here on a daily, Thursday, this is where we had the session. And we were at 19.7, and I was like, look, man, it's possible, right, that we want to break these lows, close under here to, finish closing these gaps. And I think I had to show it on a weekly where, yeah, we even had some of a gap up in here, right, from back in January. And we did it. We got sub 19, we hit 1894, and then we of course got an immediate bounce up, right? Now, because it keeps doing these gaps like this, it just feels weird that is gonna basically fill a gap to create a gap. And so that gives me the the feeling that, okay, we got this gap up because of a technical bounce, right? This is just a technical bounce in that we made a new low, and so now we're bouncing. Now, we could also see the VIX start to retreat. Again, if PPI, CPI, and those things come in line or as expected, volatility will then start to leave the market, thus meaning into the end of the year, mark my words, into the end of the year, we could actually see the VIX in the 17s going into 2023. That would be screaming beware, in that 2023 is going to be a shit year. Because if the VIX is in the 17s as we end the year, oh my God, we're gonna get so much. That bounce is gonna be so crazy. Don't worry, we're gonna be on top of it. But again, as I see right now, again, you know, it's starting off bullish, meaning that it could end the month bearish, which gets us to fill all of our gaps from 2022. And I was talking to somebody said, well, why couldn't the VIX ever break out to 40? Well, if you think about it, even though you may not want to look at the VIX in this light, hard to do technical analysis on the VIX, but technically, this is the beginning of 2022, and then this would be, the end of 2022. All the VIX did was consolidate for what's to come in 2023, where it, you know, if it ends down here, say we end down here in the 17s, right? The VIX ends up down here, going into 2023. It consolidated. What makes you think that 2023 we would definitely get above 40, because it consolidated all of 2022 and made a false breakdown to go into a big ass power up, and the VIX may be going to 50 plus the first quarter. It's kind of how I'm looking at it, right? So we go back down. We left this gap. So does Wednesday, Thursday, and Friday, right? PPI, we are able to slide back down and start to fill this gap, and then going into or maybe we just start to go sideways, and then it's PPI and in the Fed that leads us to starting to come back and fill this gap and then making our new lows. So at the end of the day, what I'm just saying is, over these next couple of days coming into Friday and next week, we can have a little bit more pressure. But then again, I'm thinking as we get into PPI and stuff, we start to see if the move is real, right? Is this move validated, or do we come back and fill these gaps that we leaving behind? If we go to the special indicators, the stocks over the 50-day moving average, I can't lie, these bad boys definitely pointed out the turn. When we talk about Ashonzay, look, every time we get up here, it's predicted to turn, and I'll be damned, we turned. Now the thing is that we're turning back to what could be an area of support, and so if we're going to get that end of the year rally, it very well could push back to these 92 and go. I had to even search back further to see, hey, have we ever gotten above 92? And as you can see right over here in June 2020, we were able to push to about 98. So let's, could this, hold here, and then if we start rising at the end of the year, makes another move back up to this 92, 98, or is this the turn, right? If I change this to a line chart, oh man, it looks like it could be the turn, but we're right on this pivot, right? And we also have support at these pivots. Let me go here, right? We got support at these pivots that could, we could definitely pull back some more and then look to swoop, or swoop up into the end of the year. But I will say this, the S5 FI indicator, it called this little pullback, right? From the 410 to where we at now. It definitely was like screaming, watch out for a pullback. And, this was one of those indicators. Same thing with the S5 TH, which is, stocks above 200. We got right into it. I think we got into a gap that I identified. And once again, this chart is starting to act funny too. So let me refresh. This should not look like this from a weekly. That's not what it really looks like. It'd be killing me, bro. Boom. This is what it should look like. Now, I mentioned how we had, some gaps up in here on this indicator. right there. All right. And that, you know, I was looking for us to kind of run up into this. And then if we did, we could kind of, again, turn, right? Once we got here, we turned. What was happening? We got up in there, we starting to turn. Now, again, we got some support, probably, you know, from a technical perspective, you could mark maybe this one or that one, if it's going to keep pulling back, right? But then for us to turn. So I can't lie, this indicator definitely gave us a clue. I said it was hitting extremes. Watch out for a turn. It definitely has started to turn, and so head on the swivel, right? Head on the swivel. And our last update for our last special indicator that we have is the PE for the SPX. So this is updated. I'll go ahead and update it again. In previous videos, we talked about how for this one, the level was 21. So we got up to that 21 area. And once we got up in here, I was looking for rejection, and look what we got rejection. We're now back down to 20 and a half. And as we talked about before, when we get into this area of 21, this is where we often started to get the turnaround. So family, I don't, this is really a really tough one to call, man, because the way I look at, or the way I see it is I can't front, right? The indicators have turned. I've been screaming for 2 weeks. Watch out for the turn, watch out for the turn, watch out for the turn. We've hit the turn. But within us hitting the turn, we are now back at a key inflection point. So let me go to the SPX to tie it all together, because with all our indicators, with all that being said, ultimately it brought us here on the SPX, which is back to 39.40, basically 39.50, which is in the middle of the road. Now, could we get more downside? Yes, to about 3,900, roughly, maybe even 38.73, 38.80. That would be supportive, right? This additional downside would be supportive for those indicators we talked about. So we could see the dollar push to hit this gap or break out above this 106, right? That would coincide with the market breaking down a little bit further. That may also look like the VIX making one more push, maybe, right? Or it could just stay flat. That's all it really needs to do, is just stay flat. It could also look like this indicator breaking down more and coming into this gap, right? We had a big drawdown before here, and the same thing with the 200-day, as well as the PE, right? We can keep coming down. So the special indicators are definitely looking like, man, this turn is real, right? At least right now. But it's also showing signs like, hey, if PPI, CPI, and Powell somehow can like set the market straight, the market could interpret this as a good sign that we could rally into the end of the year. So again, at the end of the day, we're back to an inflection point, right? The market, the indicators got to extremes, and we say, hey, beware. And guess what happened? They're starting to get back to a norm. The market came right back to a norm. And we kind of are where we've been for the past 2 weeks, when I keep saying, hey, beware, beware, beware. So I really just wanted to provide this quick market update. It probably won't too quick after I edit this video, see how long it was. But at the end of the day, guys, so what does that lead us to? So with all those indicators, it leads us into our big catalyst, which then decides the rest of the direction for the rest of the month. So think about it like this: Friday's gonna be a big catalyst with PPI, Tuesday with CPI, and then Wednesday with Powell and FOMC. I would say caution until then, because we could be sideways until then. But once that is done, I would be thinking the market will have some sense of direction, and for the next 2 weeks, you will be able to play that. So again, I'll keep you guys updated on these indicators, see how they progress, especially after the weekends, because PPI will have come out, and we'll have a pretty good update then. So In the interim, you know, with Wednesday and Thursday coming, you know, I do think we can get maybe one more down day to just test the 390. And then from there, you know, all the indicators will kind of be right back at those spots where, you know, we could go either way, right? We're going to get confirmation and validation from Powell and these next set of data points. So I'm gonna go ahead and stop sharing. So hopefully this video was helpful. Again, I'll keep you guys updated. I'll probably do another one, as I said, once the week closes, just to kind of see how all our indicators, where they at for the end for the week. And PPI will be out of the way, so it'd be really good to just kind of get an update as we go into the weekend. But other than that, man, make sure you press that like button. Make sure you subscribe to the channel. And once again, I'm your boy Zay. Stay blessed. Peace out.